My beautiful boys and girls, back again. Elena just asked me to do this extract is from Accounting 2025 November paper. I think it's final exam. Okay. And then we are given this extract. Then we are given this information for vehicles. And then we are asked to do Roman figure 1, Roman figure 2, and Roman figure 3. Roman figure 1 is the simplest because it's just cost minus accumulated depreciation is equal to carrying value at the beginning of the year. And then let's do this. $460,000 minus 396,750. 396,750. This is Roman figure 1, and then you get your answer for 460,000 minus 396,750. You get your answer. It's 63,250. And then let's attempt Roman figure 2. Roman figure 2 is looking for our depreciation for the year. Remember on my previous class where I was talking about depreciation, I told you that when you calculate depreciation, you must have your depreciation for the new asset, the sold asset, and the remaining assets. These ones are the ones that have lasted 12 months. This one and this one, we are not sure how long they lasted. We're gonna be guided by the information that we're given. Right, let's see if we have new vehicle. The business owns 2 vehicles on 28 February 2021. Okay, when is 28 February 2021? Is the year that we are reporting on. Right, let's draw our year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. February, March, April, May, June, July, August, September, October, November, December, January 2020. 2021, and this side is let me write it underneath here so that I reserve space there to write the amounts. This side going this direction is 2020. Okay, this direction is 2021. It's 2021. Right, now we are told that at the end of the year we had 2 vehicles, so meaning that from this fixed asset note, this cost at the end of the year is for 2 vehicles. Okay, and by the look of things already we have an addition which happened here. It means that we bought 1 vehicle during the year. At the beginning of the year we had 1 vehicle, so 1 that we had at the beginning of the year plus 1 we bought during the year is equal to 2 that we had at the end of the year. And remember one other thing that I mentioned on the previous class last week. I said cost at the beginning plus cost of addition minus cost of disposed asset is equals to cost at the end. You must always have this in your notes. Right, now let's go down. Let's continue. The second vehicle was purchased on 1 November 2020. Right. When was the second vehicle purchased? Here. It was purchased here. New vehicle costing 510,000. Right, and we are told our depreciation is 15% per annum on cost. Right, now let's start working. The new vehicle is the simplest one to start with. It's your 510,000 multiplied by 15 over 100 multiplied by how many months? Remember, depreciation is the loss of value of an asset through use. So how many months did we use this vehicle in the current year? We only bought it here in November. So it means that we have used it for this month, which is November, December, January, February, which is only 4 months. So multiply by 4 over 12. And how much is your answer? 510,000 multiplied by 15. 510,000 multiplied by 15 divided by 100 multiplied by 4 divided by 12. We get 25,500. 25,500. This is depreciation for our new vehicle, and we go and write it there. 25,500. Now, what is the depreciation for the sold vehicle? Did we sell any vehicle? No, we didn't sell any. And then you put 0 or dash. Remember, I told you on the previous class, it's good to always have this structure so that you don't forget that you have to add depreciations for 3 set of assets. Now, remaining is the one that have lasted the whole year, which is this one, 460. Now, we go and say, okay, let me just write it here, it's fine. We're going to say 460,000 multiplied by 15 over 100 multiplied by, we have used it for 12 months out of 12 months. Even if you don't write this, because 12 divided by 12 is 1, and anything multiplied by 1 is that number. Even though you don't write this, it's fine, but just write it to be safe, eh? Now, it's 460,000 multiplied by 15% multiplied by 12 over 12 is 24,000. You get your 24,000, and you go and write it up there. It's 24,000. Yeah, you guys now are gonna see my privacies now. I forgot to put it on do not disturb. Okay, but it's fine. And then you add these two together, then it's your total depreciation for vehicle for the year. Okay, let me do this. Do not disturb. Alright, so that I don't get notifications. Alright, so now this is your answer for Roman figure 2. 25,500 500 plus 24,000. You get your 49,500. 49,500 is your answer for Roman figure 2. And then let's go do Roman figure 3. Roman figure 3 is disposal at carrying value for our equipment. Right. Let's go to the equipment information. We are told here that depreciation is 20% per annum on diminishing balance method. Unused equipment was sold for 40,000 on 1 October 2020. Accumulated depreciation on the equipment sold was 36,600 on 1 March. Right. Let's try to do a mini fixed asset note for the sold equipment. We have carrying value at the beginning. We had accumulated depreciation at the beginning, and we have cost at the beginning. Right. We are given that accumulated depreciation on the equipment sold was 36,000 on 1 March 2020. This is the information that we have. When is 1 March 2020? It's the beginning of this year. It's here. It's the beginning of this year. Right. Let's put it 36,600. 36,600. And then, do we have the cost? No, we just know that it was sold for 40,000 on the 1st of October. Right. Can we try get the cost? Yes, we can. We are going to use this method. Cost at the beginning plus addition minus disposal is equal to cost at the end. Now let's see. We have cost at the beginning is 360 plus addition, we didn't buy anything, minus cost of the disposed is the one we are looking for. Is equals to cost at the end, which is 285. Right. Let's go to our drawing board. Cost at the beginning for all our equipments is 360,000. Addition, we didn't buy any equipment. Addition at cost, ne? And then cost of the sold is the one we are looking for, ne? It's equals to cost at the end. How much is cost at the end? It's 285,000. And then you solve for x. Three, 6, 0, 1,000 minus x. Remember this one, we are subtracting it because it's the cost of the sold. We no longer have it in our books. Minus x is equals to 285,000. Now you solve for x. This is going to jump, and then we are going to be left with x. Negative x is equals to 285,000 minus 360,000, and then our x is going to be 285 minus 360, negative 75,000, and then We divide by negative both sides, -1 divided by -1, and then our x is 75,000. Then we know the cost, the original cost of the equipment sold. It's 75,000. Now let's come here to the little fixed asset note for the sold equipment. 75,000. And what is the carrying value at the beginning? 75,000 minus 36,600. And then we get our 38,400. Why do we need carrying value at the beginning? Because we need to calculate depreciation for this asset that has been sold. Because before we sell it, we have used it until 1 October. We have used it until 1 October. Right. We have used it from the beginning until 1 October. So meaning that we have used it for 1, 2, 3, 4, 5, 6, 7 months. We have used it for 7 months before we sell it. And another thing you have to be careful of, it was sold on the 1st of October. So meaning that we have used it for September going back. But if the examiner said it was sold on the 30th of October, it means that we have used it for October as well. So you must be very much careful on that. So if it is sold on the 1st, it's here. So we have used it for 1, 2, 3, 4, 5, 6, 7 months. We have used it for 7 months before we sell it. So now, why did we do this whole thing of calculating carrying value at the beginning of the year? Because equipment are depreciated on diminishing balance method. So meaning that we have to multiply the 20% on the carrying value at the beginning of the year. Then this is the carrying value at the beginning of the year, 38,400. 38,400 multiplied by 20% multiplied by, how many months did we use the asset before we sell it? We have used it for March, April, May, June, July, August, September, 7 months. We have used it for 7 months out of the 12 months of the year. And how much is the depreciation for this asset before it was sold? 38,400 multiplied by 20 divided by 100 multiplied by 7 divided by 12 is 4,480. This is the depreciation for this asset before it was sold. So how much was the value of this asset the day we sold it? It was 38,400, which is the value at the beginning of the year, minus the depreciation, the value that it have lost since the beginning of the year until the day it was sold. Now we get the carrying value at the date that it was sold, 38,400 minus 4,480. The carrying value was 33,920. This was the carrying value of this asset the day it was sold. Right. Is the value that is coming here. Disposal at carrying value is coming here. Right. So this is our answer for Roman figure number 3. Right. Now, there was another question to say, I just forgot to jot it down here. There was another question to say, how much is the profit for this asset that has been sold? Profit or loss? How much is the value today on the 1st of October? Is 33,920. How much did we sell it for? For 40,000. cost plus profit is equals to selling price. Our cost or our value is 33,920 plus the profit that we're looking for is equal to 40,000. Then solve for x. X is equal to 40,000 minus, this one is going to jump the equal sign and is going to change the operation sign, 33,920. And how much is our profit? 40,000 minus 33,920. We get our 6,080 is our profit for this asset that has been sold. If the answer was negative, here, it was going to be a loss. But now we have made a profit. Thank you very much. Don't lose the opportunity. Send us any question that is giving you nightmares, and then let us solve it for you and upload on Facebook to also assist your fellow students, your fellow learners.